All right, should be recording. Normally it doesn't say press. That's weird. Normally it just tells me I'm recording to the cloud now. Hmm. Oh well. All right, so SPY. Earlier today I said I was going to post daily charts for SPY, but then I remembered the team meetings tonight, so I opted not to, and I'll post charts later tonight or tomorrow morning. So this is really interesting development now for SPY and the market in general. Okay, I was watching this daily trend line today, and I'm going to be honest, I was expecting rejection off of this because we never got a clean rejection off of it. Okay, this daily candle again, never touches this trend line, so it never tests that support. Now, a bear is going to tell you as they take as they make their rounds on this particular day that it did reject that trend line. Okay, you can make that argument if you want, but 458 is where it is. In reality, it's 459.58. So that's $1.50 away, roughly, away from that trend line. To me, that's not good enough of a rejection. Okay, plus look at the candle. If anything, it's overall bullish because you have a long lower wick, and look where they've closed it. Now, yes, it is coming at the trend or at the top of the trend. And I know I did the same thing on this date. You can pull up a bullish candlestick that looks like that, and it's green technically, but it can be bearish if it's coming at the top of a trend. Okay. Overall, excuse me, I was not sold on that SPY rejection. Now, again, coincidentally, Facebook earnings happen right after this candle closes and everything shits the bed. Hence why we see this gap down right here. Okay. I was really waiting to see what price was going to do when they tested this trend line. Okay. The bull setup to go long was there yesterday. Okay. Yesterday at close, the setup was there to swing calls. But here's why I didn't. I'm going to be honest. I've been in a rut. Mentally, my mental state for trading can be a lot better than yesterday. Speaking of yesterday, not so much right now, thanks to QCon and Pinterest. But yesterday, my mental state, I was not in the position to take a half-assed 50-50 setup. Okay. The long setup was there yesterday. SPY bullish engulfing candle on the daily yesterday. The daily candle did print bullish engulfing. Remember, for an engulfing candle, it only has to engulf the body. The wicks are extra. But so long as it engulfs the body of the previous candlestick, it is considered an engulfing candle. If it engulfs the wicks, that's great. That's more firepower. That's stronger conviction that you have. But the only thing that matters is the body. Okay. Yesterday's daily candle for SPY was bullish engulfing. But now I'm going to change my cursor real quick. Follow the cursor down. It's low volume. Okay. That volume bar does not eclipse the previous volume bar. That's not high probability. That's not a high probability long setup. Okay. The high probability long setup is for the volume bar to eclipse the previous one. And you have that bullish engulfing candlestick. Okay. So that was my conviction for not swinging calls overnight. I mean, it was there. Don't get me wrong. The bullish engulfing candle alone, that's all you need technically. But the volume bar, never, ever, ever overlook volume if you trade with TA, because volume can make or break an entire setup for me, as it did with SPY. Okay. If you have more volume, if the volume bar eclipses the previous one and you have a bullish engulfing candle or an engulfing candle in general, that's high probability. Okay. That's like the 90 to 10 setups, right? So 90% out of 100, I'm 90% confident that this trade is going to be profitable. Okay. You can never say you're certain because that's 100%. Nothing's ever 100% certain in the market. Okay. There's always going to be that unknown factor. Okay. We are not BlackRock. We cannot move the market. So, okay, we are retail. So therefore, there's always going to be that unknown factor. But hence, a bullish engulfing candlestick with volume, that's 90% probability it's going to work out in our favor. Okay. A bullish engulfing candle that is lacking in volume, that's more of a 50-50 setup. Okay. Some people will tell you it's like 75-25, 60-40 it works out because it is an engulfing candle. Okay. I place a lot of emphasis on volume. Some people don't. Some people, don't rank volume as high as they do, and that's fine. That's their style. They have their own style, okay? In today's case, they made a lot of money because they caught that gap up and SPY continued to move higher through the day. But for me, there was not conviction to go long overnight, last night, or yesterday at close to go long into this morning because of that volume bar. Okay. And keep in mind this trend line. This trend line resistance was still sitting there. Now I'm going to talk about the trend line. SPY, I asked that question in the server earlier, and it was like, I think the exact time was 10:23. Okay, it's 10:23, 7 minutes until a 30-minute candle closes. Okay, I'm thinking, yeah, 7 minutes is a lot of time, but then again, it isn't. Okay, it's not like the 30-minute candle opened 2 minutes ago. Okay, well, when I asked that, these two 30-minute candles right here were okay. It was 10:23. My bad. These two 30-minute candles right here looked very identical. They were basically the same candlestick. And I was telling everyone, this is the potential of a tweezer top. A tweezer top is a bearish reversal signal that candlesticks can give. Okay, this is something that I was watching. Let me flip it back to the daily because I just showed you on the 30-minute now. This daily candle opened right on this trend line. This is a big trend line today. This was huge. This was like a make it or break it day, in my opinion, for the market, and the market made it. Okay, they opened right at trend line resistance at 10 a.m. They're showing a potential tweezer top. That's a big deal. Okay, the market gapped up. There's a gap to fill to the downside now. Potentially, we can reverse at 10 a.m. and so off through the day. That gap up was a bull trap. That's what I'm starting to think. Lo and behold, as I'm asking this question and everybody's answering, this 30-minute candle switches in the last 7 minutes, and it's overall a pretty bullish candlestick. Okay, so that tweezer top setup was busted because the candle obviously closed different. I asked like 7 minutes early. Okay, notice where the sellers were sitting though, right at that trend line. Notice on the 30-minute time frame, look where buyers came in and were tested and bought the dip, right on that trend line again. And look what price does into close. The market moves higher. Okay, buyers stepped in right where they needed to at the trend line, and price moved higher into close. This trend line, as shown right here at the 12 o'clock 30-minute candle, is now validated as support. Okay, there is this gap to the downside that we have yet to fill. Okay, it's like from 454.26 roughly, it looks like, to 452. Okay, so like a $2.25 gap fill. That's a pretty nice gap fill for SPY to the downside. Okay, the conviction to trade that comes with a break of 420 or 454.25. Okay, that's your conviction to go short. Until price gets there and breaks below that level, this gap fill is not in play. Now, the closer it gets, the more I'm going to watch it. But for right now, this gap fill is not in play. Okay, buyers held that trend line and they moved price higher into close. So switching it back to the daily chart now, price opening at this trend line and holding it, buyers held it as I just showed you on the 30-minute and moved higher into close. That's bullish. There is absolutely nothing bearish about this unless you want to say, like I showed you with ES, it's in a supply zone because of the rejections that we see right here for SPY. It's pushing into a supply zone. Well, we don't have a bearish candlestick yet, except for this one, thanks to Facebook earnings. Okay, this supply zone, if we get a daily candlestick like this tomorrow, thanks to CPI or whatever, okay, then yeah, supply zone is validated. But right now, supply zone isn't there. Okay, now I want to show you triple Qs because triple Qs ended up giving the A+ bullish setup. I'm going to go ahead and delete this bear flag because bear flag is pretty much busted. All right, so triple Qs, I was just talking about bullish engulfing candles. The triple Qs gave that. Okay, the triple Qs, bullish engulfing candle with volume bar eclipsing the previous volume bar. Okay, triple Qs gave that. But again, in my mind, my mental state was not the best as far as like confidence goes, all that good stuff. Triple Qs show one thing. Okay, SPY or triple Qs, let me put it this way. Triple Qs shows that 90 to 10 setup. That's great. SPY shows the 50-50 setup. Okay. You could say bullish engulfing, one has volume. That's conviction to go long. I agree with that. But the way that my confidence was going yesterday into close into today, I just didn't want to take that setup. Okay. 6 red days. I'd rather not start my 7th in a row being red. Rather not start that way and dig myself a hole to climb back out of. Okay, so I opted to be all cash. But the triple Qs did give that setup. And look at the follow through today. Okay, this is the kind of 90 to 10 setups that you can get when you stack the probabilities in your favor. Triple Q's closed at roughly 359.12 yesterday. Okay, look where they opened, 363.71. All right, so let's do the math. 359, they open at 363.84 roughly. You've caught pretty much a $4 gap up. That's a really, really good swing trade. And look at the TA setup. There's no indicators on this, right? Nothing but price action right here and volume. A plus high probability 90 to 10 setup. That alone caught you a $4 gap up. No indicators, no Fibonacci's, no nothing is on my screen right now, breaking this down and the potential that this trade had. Okay. I have notes written down, so I'm going to start reading off of them. Okay. Bigger time frames are always more dominant. Okay. They're also less noisy. If you look at the 1 minute time frame all day long from 9:30 to 4 p.m., I can guarantee you eventually you're going to psych yourself out of trades that you take an L on that eventually end up going your way. If you look at the 1 minute time frame all day long, that's way, way too much noise unless you're a scalper. Okay. If you've got a $50,000 account, $100,000 account, and you want to scalp SPX or NDX all day long, have at it. That is going to be your cream of the crop 1 minute time frame. Okay. I'd recommend that you get a really smooth brokerage with fills. Okay. But if you're not one of those large account traders, okay, and scalping isn't your thing, do not watch the 1 minute time frame. There's so much noise. I don't even know how many 1 minute candles there are in a day, but it's a shit ton. And it's all it's going to do is psych you out. If it's one candle, one 1 minute candle goes against you, it can psych you out and it can force you to take an L when in reality the setup wasn't even close to being busted. Okay. I also have written down never ignore volume. Okay. Volume is going to put high probability setups in your favor, and it's going to make you walk away from those 50-50 setups that maybe you shouldn't take. More often than not, when you end up not taking a 50-50 setup, it works out in your favor of not taking it. In this case, for me, for SPY, it didn't work out for me. I missed out on the potential to make money with the gap up this morning, but that's fine. We made up for it. Okay. Bigger time frames are always more dominant, less noisy. You really can't get a whole lot less noisier than the daily time frame. Okay. I'm going to say this also now, the daily time frame. Don't start looking at the daily time frame and entering trades until at least 1:30 to 2 p.m. Okay. At 2 p.m., there's been plenty of time for those daily candles to fill out. There's 2 hours left in the trading day. Okay. Can a lot happen? Absolutely. And a lot can happen, in the last 10 minutes. Okay. But you put the odds in your favor of that daily candle staying intact with the last 2 hours to go versus 10:30, 11 a.m. Okay. There's quite a bit of time left in that daily candle to form and to work itself out at 10 a.m., 10:30, and 11 a.m. Okay. 1 p.m., even noon, that's still way too early to start basing trades based on the daily time frame at noon. Okay. I mean, there's going to be instances where you can, but understand that's really early in the day. I mean, at noon, you've still got 4 hours left in the day. Okay. There's been many times, I'm sure we've all seen, something has a very strong open, and when the second half of the day rolls around, it just completely fades that entire move back down to the downside. Okay. So always give your daily candles time, because there's a whole lot of time in that candle and it can tell a very important story. Hence with SPY and Triple Q that I just showed you. Okay. Also, real quick, tonight's meeting is about TA and technical analysis and all that good stuff and chart patterns. Understand nothing is ever 100%. Okay. Nothing's ever going to be perfect in TA. Okay. You might see something in your setup that no one else sees. Okay. Don't take the opinion of anyone else. If you want to ask for conviction, or if you want to ask like, hey, do you see this? That's perfectly fine. But don't let someone else deter you from something that you see value in. Okay. Now, what I will say is if you see a bear flag when in reality it's a bull flag or something to that effect, then obviously, you might be wrong if you're new to like patterns or something like that to that effect. Okay. Maybe you got your language mixed around or something to that degree. Okay. Take that into account with your decision making. But if someone just flat out says, no, I don't see that, I don't see what you're talking about. Okay. That shouldn't be the end all be all. Follow your conviction. Okay. Now, say, you respect this individual a lot, and I don't know, maybe you look up to them and you take their word seriously, and they have an impact on what you do. Okay. So say they don't agree with Say they don't see what you see. That's fine. Enter one contract. Okay, I don't know. Maybe everybody in here trades one contract at a time. Maybe your normal position sizing is 5 contracts or 3. Okay. If your position sizing is multiple contracts and this individual that you place a lot of value in disagrees with you, I would still say learn from your TA, learn from whatever your analysis is and follow it. See where it gets you. Okay. But go in with one contract. This way you minimize risk, right? Every trade brings risk with it. But instead, if somebody disagrees with you, okay, so lower your risk. If it's a loss, that's fine. Everybody's going to take a loss. Learn from it. Okay, what went wrong? Did the person say that disagreed with you? Were they right in what happened? Okay, or did something completely different happen? All right, learn from your losses, but don't let someone's opinion stop you from entering something that you see value in. Okay, follow your own TA, follow your own conviction, and see where it gets you, because that's how you're going to learn in the end. You're going to learn the most by trading on your own every single day, doing your own TA, doing your own due diligence. Okay, that's in the end, that's what's going to get you farther. And write down everything that went good and bad. Okay, if it's a loss, cool, learn from it, write it down, what went wrong. If it's profitable, that's great. That's even better. Okay, because you saw something, you saw value in something that no one else did. You followed your own intuition and TA, and it led you to profits. That's even better, in my opinion. Okay, so always learn from your losses, always learn from your wins. Let me see. Oh, and then again, nothing is ever 100% or perfect. Trading with technical analysis, and TA, or excuse me, and price action. All right, so I think I went over everything that I wanted to. For the beginning, I see some messages. Let me make sure I'm not missing anything. Gap up on the to that close on the daily above us. For triple Qs, right here, is this what you're talking about? Because I'm trying to time. I don't see a time next to this message. Yeah, absolutely. Yeah, I can see that. And again, triple Qs, I mean, that's an actual hanging man candle. Okay, again, Facebook was the catalyst for this reversal candle, right? That daily candle came when it closed. Facebook reports earnings a minute later, and this is what we get. Okay, funny how that lines up. TA, or the market, prints a hanging man at the top of a trend. What's the trigger for that hanging man? Facebook earnings. It's funny how this lines up sometimes, coincidentally, if you will. Okay, so now I want to start going over specific setups. I'm going to start with a loss. All right, this was IWM. Yes, that's a good guess. That's very true. That's very true. Okay, so where am I? So I'm going to start with a loss yesterday, and I'm going to go over the trades for today. So IWM, where is my range? All right, so we have a supply zone. I forget exactly how I drew it. I'm going to try and remember like everything that I remember seeing. I think I'm probably drawing it a little bit bigger or a little bit higher than what I really was. Because I know this candle showed it as well, right here. And I remember showing IWM on the 30-minute when I entered this trade. Okay. So IWM supply, or supply zone rejection yesterday, is a trade that I was trading. Okay, I entered IWM puts. I'm going to lock this back in real quick after I got it charted. Okay, so why did I go short on IWM? Okay, so here's the supply zone that we have noted, right? Here's our first rejection, and I can actually shrink that back in because I think I'm trying to remember how it was. Here's our first rejection of the supply zone. Okay, this doesn't make our supply zone. All right, preferably when I see, and by the way, real quick, supply and demand. Supply, if you hear me say supply zones, because I trade with them. Supply zones is a zone on the chart where sellers are sitting. Either people just collect profits, and when people sell, that makes the stock go down, okay? Or you have sellers that come in to push price back down to the downside so they can make money, right? Because market makers can make money shorting stocks going up or when they go down, okay? In case anybody didn't know that, okay? So supply zone on a chart is where sellers are sitting that push price back down. Or in a supply zone, this is where price generally sells off because people take profits, Okay, there's kind of two interpretations of it that can happen. Okay, so here's our first indication. This is a supply zone right here, but this doesn't make the supply zone. All this tells me is that sellers are sitting here. Okay, that's the first thing I see. Sellers are sitting here. Okay, now we get to this point of time. Okay, price pushes into this supply zone, touches it twice, and pulls back. Okay, now we're starting to build confirmation of a supply zone, pushes right up to it, pulls back and rejects. Sellers were sitting there. Okay. Now look, later in the day, price pushes back into it. Kind of bullish, low volume, but it's there. Then look at this 30-minute candle right here. Okay. Very strong, clean rejection. Goes to the top of the supply zone. This whole candlestick was green at one point right here. Overall, very bullish. Fades the entire move. Coincidentally, look where price topped out at. Okay. Now I have confirmation that this is an intact supply zone. We're now on 3 tests. I need at a minimum 2. Okay. And if you haven't seen charting my support and resistance levels videos in my library, please watch them, because this is the same rule that I'm going off of for supply and demand. All right. If you haven't watched those videos, watch them because they are good videos. Okay. This is the 3rd test. That's all the confirmation that I need that this is a supply zone. Okay. Here's the 3rd test, and here's the pullback. Clearly, sellers are sitting here for IWM. Okay, here we are on the 30-minute time frame. Here's one push into the supply zone. Rejected. Overall, bullish candlestick, though. Okay, it's, very large green body, no lower wick. Okay, I entered right, I believe, if I'm getting this time right. If I'm not, and you remember, correct me. But I believe I entered right after this 30-minute candle closed. Okay, that 30-minute candle prices well into the supply zone, right? And look where we closed. 30-minute candle closes down here. Okay, look at the long lower wick. There was selling pressure, and then buyers bought it up. Pretty much, this is a doji candle with a very small green body. Overall, neutral. I would just say it's a neutral candlestick, but it's showing selling pressure in the supply zone. Okay, look what happened at close yesterday when price entered or pushed into the supply zone. Now, of course, as soon as I enter this trade, as fate would have it, price rips right through the supply zone, trades invalidated, I sell for a loss. Okay, it sucks that it happened, but it is what it is, and it happened in the challenge account, so it ended up being a bigger impact on that account size than what it would have in my main account. Okay, it is what it is, though. It sucks, but that's what happens. We stick to our rules. And I said my stop loss was price breaking through this supply zone, and breaking through means closing above. All right, so that was my conviction. I wanted to start this out with a loss so you can hear my walkthrough and my analysis and my thought process behind entering this trade. Okay, I see that doji candle. There's buyers and there's sellers, but look where the sellers are coming in the supply zone that we saw previous rejection at. Okay, that's all I needed. That was my conviction. Closing above the same time frame. Closing above on the same time frame you entered. Yes, I keep time frames the same. If I enter a trade on the 30-minute time frame, I'm going to keep watching that trade on the 30-minute time frame until like profit taking or stop loss. Now, if this trade is going really well in my favor, okay, like QCOM, I'm going to get to QCOM later. QCOM, or I'm going to try and keep talking about IWM. Okay, if the trade is going really well in my favor and I entered on a smaller time frame like the 30-minute, I'm going to then start switching up to bigger time frames. Because if the trade keeps going in my favor, there's a bigger move in play, right? Like Pinterest was different versus QCOM, and I'm going to talk about that later. If the trade keeps going in my favor past my profit-taking points, clearly there's a dominant market maker in this stock, and I'm with him, right? Or I'm with that market maker right now. So I'm going to trade with him or with them, and I'm going to follow them, okay? But yes, I do watch on the same time frame that I entered, because that's how I dictate my stop losses too. And in this case, my stop loss was 30-minute candle closing above the supply zone, as you would have it. That's what happened. So we sell for a loss. Big deal. All right, on to the next. Here is something that I want to talk about. That makes sense sometimes. Maybe a lot I enter on one and watch a smaller time frame. Okay. So I used to have that problem. I really did. I'm not going to tell you that it's bad, that it's something that you shouldn't do, because I don't think I'm the one to say that. But what I am going to tell you from my personal experience, what I just said that I do has helped me not leave trades too early when the setup wasn't busted, right? Now, in this instance for IWM, this didn't work out in my favor. Okay. Let's say my stop loss was a break above 201 because that's where this wick was rejected. Okay. Or the top of the supply zone. Okay. That would have saved me money. It wouldn't have made my loss as big. But how do I know, price is ripping above the supply zone, and in the volatile market conditions we've been in, price rips up the trap bulls and then completely fades back down to the downside. Okay. So this is like a double-edged sword, right? It can help you stay in your setups that aren't busted. Okay. But it can also lead to bigger losses. And in this case, for me, IWM, it led to a bigger loss. So it is what it is, take it on a day-by-day basis. But here's another thing I'm going to say to Breezy. The bigger the time frame that you enter a trade on, I'm talking from personal experience. You got to have like rock solid, no shaky mindset. Okay. Because say you're watching on the daily time frame. Okay. The daily time frame, if you enter a trade on the daily time frame, guess what? I'm probably going to watch it on the daily time frame. If it's going to hit my stop, it's going to hit my profit taking point. There's a whole lot of noise on the daily time frame. And that's a whole day for the most part, up until like 1 p.m., 2 p.m., 3 p.m., when that daily candle is getting closer to closing. That's when you really get patience and discipline put to the test, because you got to give that candle enough time to close out. There's been many instances where I've seen a daily candle go below my stop loss, but what I end up doing is my stop loss is a daily candle closing below that level. So I'm waiting until like 3:55 p.m. on the East Coast for it to hit my stop loss. Okay. So during the trading day at like noon, price can go below my stop loss. But if buyers come back in and buy price up and push price back above my stop loss was never hit. So, people will ask me from time to time what my stop losses are. It literally varies trade by trade by trade, because each one is different and unique. So far as price action, the candles that tested the supply zone would have been a better trade for puts. Yes, I was watching a YouTube video on price action, and they were talking about how the bodies of the candles get smaller on the supply. Those smaller green candles prior. So yeah, I'm gonna be honest. Like, I've never noticed that the candles get smaller in a supply zone. They could be right. I just never noticed that. I've never thought to look at them that way. What I end up looking at is when that candle closes, how does it treat the supply zone? Okay, this 30-minute candle right here closed with volume, eclipsing the previous like 5 or 6 volume bars. It was a bearish reversal candlestick in the supply zone. I'm waiting for that candle to close, and then the next 30-minute candle at 3:30 is bearish overall as well. This 30-minute candle, I waited for it to close. Closes as a barely bullish doji, shows selling pressure and it shows buying pressure. Okay, the doji came in the supply zone, or the top of the wick for that doji candle came in the supply zone. So that was my conviction. I personally wait for the candles to close, and I don't really pay attention to like how big they are, if that makes sense, Alex. Now, real quick, this is something that I'm going to see right now, but I think we traded this last Monday, if I remember correctly. Okay, for DIA calls. I think it was last Monday we did this. Price broke out above the previous supply zone, because remember, we traded DIA puts for that supply zone a few weeks ago. I think this was now 3 weeks ago for the puts. So last Monday, we traded calls on a retest of that supply zone. That supply zone was now a demand zone because buyers stepped in. Look what IWM does today, or yesterday, I'm just now seeing this. I never looked at this until now. IWM double bottoms off of the previous supply zone. Okay, it was clearly supply right here and right here. Double bottoms off of the previous supply zone. Guess what? Just like old resistance can be new support, previous supply zones can be new demand zones. I'm saying can be, not will be, because it won't happen every single time. Okay, but notice what happens on this double bottom. Testing the previous supply zone, volume comes in. Look at these two 30-minute candles on the retest. Okay, the biggest volume bars that IWM had seen since it looks like 11 a.m. Okay, buyers came in, Old resistance right here is now new support. Look what this led to. A gap up this morning. Every call would have been green this morning if you traded this double bottom off of previous supply, now demand. Okay. Fair value gap up. Almost. Is it true that the more times price tests? Yes. In theory, that is the line of thinking. I have seen, like, and when I say that's in theory, that's what every textbook is going to tell you. In personal experience, I would say it's 50-50. In my opinion, sometimes every time that price rejects off of a certain level, the weaker the stock gets. And I can't think of an example off the top of my head where that's the case, but I know I have seen that before, that every failed push higher, it gets rejected. Eventually, it leads to a big leg down. So that's like a textbook thing. I personally consider it like 50-50. Okay, but that's just me personally. Okay, so now I want to move on to Apple. I'm going to talk about Apple. This was on my watch list Sunday night. Okay. I hope somebody caught this bull flag breakout from the get-go, because personally I did not. But that's okay. We're in Apple calls now. And it really looks like Apple option premium is a deadbeat, because I think I closed at literally break even today on Apple calls in the challenge account. So, that Apple premium must be a deadbeat right now. But it is what it is. So Apple's bull flagging. Okay. So Apple's bull flagging, and I went to the high and the low of this bull flag. And here's my line of thinking for this bull flag breakout and how I chose the option premium that I did. Okay. I took the high and I took the low. Here we go right here. The high, or this bull flag, had a range of $6 for Apple from the high to the low. Now, some people might disagree with this line of thinking. That's fine. This is just how I approach bull flag breakouts. Okay. So I go from the breakout of this bull flag. Okay. Right here, this breakout. This graph stops on February 18th, I believe. I think. I could be wrong, but that gap, or this, actually, no. I'm going to drag it out because I was wrong. Okay. So this right here is another 6 days. Okay. Apple was in a bull flag, I believe, or no, just kidding. Hold on. Let me reset my my thought process, because I start talking so much and I lose my train of thought. All right. This range right here ends on February 18th, as you can see at the bottom of the chart. That is our expiration for the Apple 180 calls. Okay. So that's why I drew that out over there. I was trying to think and read my notes at the same time talk. All right. Apple breaks out right here. All right. So this is the bottom of this range. This is the breakout right here at roughly 172.50. I'll round down a little bit. 172.50. I go from the breakout as a low and I go up $6. Okay. I want to see where price is $6 away from the breakout. Now, why did I choose $6? Apple had a high and a low of $6, $6.09 in this bull flag right here. Okay. That's how I chose $6. So I go from the breakout point where price broke out of the bull flag and I go $6 to the upside. And then I also pulled it over to expiration date. Okay. February 18th. So Apple right now, $6 away from that breakout, because it was in a $6 range in this bull flag. Okay. Apple, you can $6 away from the breakout. It's 178.79. Okay. Apple closed today at 176.41 and I'm break even. If Apple can get to 178.79, which is the top of this $6 range that price was trading in that bull flag, which matches that bull flag breakout, our calls will be in profit. Will they be in the money? No. But our options, and some option or people who are new to options get mixed up on this. We don't need options to go in the money to be green and sell for a profit, right? We all know this. And if you don't, that's a very important thing to remember if you trade options. Okay. If Apple gets to 178.79, guess what? Our calls are going to be profitable and we can sell for a profit. Okay. But this is why I chose 180 strikes. Okay. Price closed at 176.41. Okay. February calls are monthlies. They have the most volume. I don't have to worry about liquidity. If, say, this Apple trade goes against us, and I have to sell for a loss, guess what? For February monthlies for Apple, I can guarantee you, unless you went like 200 strike, which is just dumb to do, you don't have to worry about liquidity. Okay. I can guarantee if we sell for a loss tomorrow, these 180 calls will have a buyer because they're monthlies. Wall Street, hedge funds, market makers, and retail all love to focus on monthly options and contracts. Okay. They have the most liquidity. So that's why I chose the 180 strike. All right. And they were the closest strike to being out of the money. I think it was like 178.5 and then 180 was how the option strikes went. Well, I chose to grab 2 contracts instead of 1 at 180. Okay. So just because of how the difference in premium and how expensive they were and all that good stuff. Okay. But this was my line of thinking with the bull flag. Okay. $6 range. You go from the high to the low. A breakout of that bull flag, you match that range. $6 or a $6 breakout from this bull flag gets us to 178.65 roughly. So does anyone have any questions for me about that breakdown that I just went through? Because I don't think I've ever walked through that before with anyone. Yeah, I'll go over that after I'm done talking about Apple. Oh yeah, absolutely. Price can definitely retest the breakout. I mean, I've seen that happen 1,000 times. Absolutely. But the farther we get away from that, the more unlikely it is. Right. So if we're going to see a retest, preferably in a perfect world, it comes during the second 4-hour candle yesterday. That never happened. Price kept moving up with volume. So, if price comes down from here to retest that bull flag, well, price did break out, but I would say the move wasn't maximized or the move wasn't maxed out, if that makes sense. Because to come down and retest that trend line, that's a pullback. Like I'm going to say that's a pullback and not a retest because you figure that trend line is down here. So price to pull back, I mean, we're looking at a $6 to $5 drop. Yeah, I wouldn't say that's necessarily a retest. I'd say that's a pullback. But yeah, I'll go over Snapchat. Where are we? My watch list. Ascending triangle. If that's what you see, I don't know what you see, but like that's the first thing that comes to my mind when I see Snapchat. Now, of course, this is like subjective, right? But you have the retest right here, and then we see this right here. So I see the ascending triangle right off the bat, and you have this right here sitting above you. Nice gap fill for price to fill. Is that a big flag? Yeah, you could say it's a flag. Yeah, because that earnings rally is going to be your flag pull, but it's going to be tough to draw the flag. Like you can draw it there, and then that like second one. I mean, that's going to be tough. You can draw it like that. It's just those lower wicks right there. Throw it off. But yeah, I can see it if you see a bull flag. I see it. A bull pennant. Yeah, I can see that too. Overall, I mean, the first thing I saw was an ascending triangle. You see a bull flag and then a bull pennant. Yeah, so either way, each of those 3 patterns is bullish continuation, right? Here's your breakout, and then you need continuation. There you go. Yeah, definitely. And the gap fill is sitting above, so there's a magnet for price to fill. I would say above $44, though, I would start, just not be greedy, take profits. You can see rejection right there at 44. Rejection right there on a big move that Snapchat has made. Another rejection at $44 kind of makes sense. I'm not saying it's going to happen because fuck it, price can blow right through and head to 50, but it makes sense for price to reject there. We got over Friday high, I think, into the gap. Okay. Yeah. I mean, if the market is green tomorrow, this gap is going to fill. I mean, CPI, this is going to make or break the market. Either the biggest bull trap of all time, being sarcastic there, but I mean, the biggest bull trap of the year to date was laid today, and CPI completely shits the bed, and this market craters. I mean, half of retail's cooked. We're all under the bus on that one, but it is what it is. In my opinion, though, look at the indexes. Triple Qs up 2%. SPY is up 1.5%. Dow Jones up nearly 1%. IWM, the small cap index, up almost 2%. There's nothing bearish right now about this, except I will say real quick, volume divergence is suggestive. Yeah, I would say I can definitely agree with that. I will say though, one thing I did notice today, the market's been wishy-washy the past few days up until yesterday, where we got some bullish momentum. And then obviously today we see follow through. The one name that held up through that wishy-washy from Monday and into last week was Amazon. Amazon held its own and was green every single day until today. Amazon's flat. I mean, that's literally flat for Amazon. As big as it is, red by $4.48, that's just flat. But it's interesting that Amazon was showing the most strength recently when the market wasn't. Suddenly the market is strong, Amazon is flat. Now, a bear is going to take that and run with it and say, this is your sign. Okay, I'm going to be realistic and I'm going to say money just wasn't in Amazon. It's been in Amazon the past few days. It flowed into literally everything else today. All right, I mean, literally everything, every tech name on my watch list is green besides Amazon. Okay, this is all tech right here on my watch list. Keep it, that's something to notice. Okay, so like I want you guys to start noticing that as well. Okay, if the market is wishy-washy, it's struggling to pick a direction, look at your leaders. Okay, it sucks, but the leaders of this market are FANGMAN stocks. All right, now I don't trade Amazon, I don't trade Google, but I still watch them because they're market leaders. Okay, Amazon had been the leader and was showing strength in the market. Now the market rallies, Amazon didn't rally with it. It's just interesting. It's something to note because more often than not, when these weird things happen, they can be a precursor to something else that happens that's bigger. Okay. If the market is red tomorrow, I'm going to say Amazon was something to note because Amazon was flat today when everything else was green. And Amazon had been the leader when the market wasn't leading. Okay. I'm not going to say that was your signal to short because I don't think it is. It's literally flat. It's not like it's red by 80 bucks. That would be different. Amazon's flat. I don't think that's a reason to go short on everything when the market is monster green everywhere. But it's something to keep an eye on in the future. Zero-day calls into close and play Amazon earnings without. Oh, yeah. Oh, absolutely. Absolutely. That is definitely something that a lot of people do. Absolutely. And you could have swung them into the next day once you saw the positive reaction. But of course, that night, futures faded in a big way. I was kind of shocked. But yeah, that is absolutely. If you've never heard of this idea or like method of playing earnings, read what he said. If you don't want to trade the individual stock, but it's a very big weighted name like Amazon, Amazon is number 3 in the NASDAQ, if I remember correctly, and you want to play their earnings, go to Triple Q. Okay, Facebook's number 4 in the NASDAQ as well. So Apple's number 1 in both SPY and Triple Q's. Microsoft is number 2 in both of them. But yeah, what he said is a very good way to play the sympathy move. All right, so I'm going to go to AMD now. AMD, another loss. Is what it is, though. I'm going to start on the 4-hour, and I might go to the hourly. All right, so AMD, this was another setup on my Sunday night watch list. We traded it. Maybe some people sold for green. I hope. I sold for a loss. Stock hit my stop loss. All good, though. All right, here's the breakout. I'm going to switch my cursor. Here's the breakout that we traded right here, pushing higher. Okay, the setup worked to a T, but the market didn't match. Okay, I don't think NVIDIA was leading that day like NVIDIA was today. Look at NVIDIA, up 6.5% or $16. Now look at AMD. It's up almost $5 or it's a 3.5% move. Okay, NVIDIA is the semiconductor leader. AMD, it's getting there, but it's in a solid number 2 place. AMD is not going to probably, I'm not going to say ever, but right now, NVIDIA is the semiconductor leader. AMD is a solid number 2. It's still a follower stock. If the leader in NVIDIA isn't leading, it's harder for the follower stocks to see follow through. And that's what we saw on Monday when we went long. Now look at the breakout. This 4-hour candle closes. I don't remember if this candle was closed or not when my stop loss hit. If I remember correctly, my stop loss was 30 to like 35%. So I went with a percent stop loss this time. Okay, this volume or this volume bar on this push higher, when this 4-hour candle closed, look at it. Look at this volume bar right here. It's lower than the previous few days when price is range bound. Okay, so when a push higher out of a chop or out of a range bound scenario, a push higher, there's no volume. Okay, nobody's buying AMD stock to keep pushing it higher. It ends up being a fake out and then, a somewhat bearish close, like whatever, it's a red 4-hour candle. I'm not going to go into the 30-minute or 15-minute to say definitively it's a bearish close. Okay, but look at the volume. The volume was never there on this breakout, but we see this in hindsight when this 4-hour candle closes. So obviously the breakout higher was low probability, and that low probability ended up leading to a high probability reversal back into the range. Now, look at this 4-hour candle when price breaks out. We again get low volume. It looks like it actually matches the previous 9 or 8 a.m. 4-hour candle. But then look at the key right here for this second 4-hour candle, okay, from yesterday. This started at 12 o'clock, closed at 4 o'clock yesterday. There's a little bit of buying pressure that comes in. I'm going to move my cursor so you can see it. Right here, a little bit of buying pressure. So price dipped down and buyers bought the dip. Look at the 4-hour candle. Overall, it closes. It's a very bullish candle. A little bit of selling pressure, but overall, very big green body. It's bullish. Look at the volume. It looks to be the second biggest volume bar that AMD had seen since since this one right here, which was February 3rd, last Thursday in the morning. Okay. That's noticeable. Price breaking out of this range now. Buyers bought the dip clearly by judging by this little wick to the downside. It comes with volume. There's your continuation signal. Okay, now say you wait until 3:58 to enter calls, which is fine. You're waiting until market close because you really want to see how these candles close. AMD closes at 128.23. Say you put, I don't know, price going below $128 as your stop loss. Okay, at a very tight stop loss, below $128. Look at this lower wick. It never breaks your stop loss. Or actually, it might have, just kidding a little bit. Okay, so bad example there with the 128 stop loss. Say you slap on 25%. You keep a tighter stop loss because it's a swing position. We'll go that way. Okay, 25% stop loss probably is never hit on this trade. Now, it might have been green to red, but your stop loss of 25% was never probably hit this morning if you took that trade. Now, say you stayed in it because you wanted to see how this 4-hour candle was going to close. Like I talked about earlier, I forget which name I was looking at though. I think it was IWM. Okay, this 4-hour candle, very bullish. Buyers clearly bought this dip off of a psych level of 127.50, it looks like. Look at the volume that comes in when they bought this dip. Okay, yes, it is red, but look at the volume and then look at the lower wick. Like, learn to read what the candlestick is telling you without having a bias. Okay, yes, it's a red candlestick, but look at that long lower wick. That is buyers stepping in to buy price back up. There's nothing bearish about it besides the candlestick being red. Okay, that's, in my opinion, that's my takeaway from it with having no bias. Okay, and then look at the follow through. Okay, very bullish follow through, volume matches, very bullish close. And to add to your conviction, the leader was leading today for AMD. This is why volume is important, because it leads to follow through. This is what happens when you get follow through. Okay, AMD closed yesterday roughly 128. Today it closes at 133. Okay, that's a $5 move in one day because of volume. Volume came through. Okay, now of course hindsight is the greatest thing in the world, so I get to talk like that. But at this point in time, when we traded the breakout, well, why did it fail? Volume never came in, and that's shown right here by this first 4-hour volume bar. Okay, does that make sense to everybody? Does anybody have any questions for what I just said and went over? Volume precedes price, right? Precedes price. Yeah, I would think I can agree with that as far as seeing continuation. I agree with that. As far as seeing continuation, yes. I think so. Yeah, I mean, that's shown right here in AMD. Volume precedes price. Okay, volume's higher. Well, look what we get today. I mean, that's a $5 move to the upside. So yeah, I can see that. Yeah, I agree with that. Volume precedes price. I don't know if I've ever used that saying though. I don't think I have. But yeah, I agree with that. All right, QCOM. I'm going to go over QCOM now. All right, did anybody take this QCOM trade? Because, I mean, I swung full position, so it's just greed. If I'm red tomorrow, it's whatever. I just got greedy. Is what it is. But, I mean, I'm in love with this setup. Absolutely strong close. This setup went to a T. I mean, there's not many times I can say a setup worked out perfectly to a T. Like AMD, IWM, this was a setup to the T. All right. Oh, and you know what? Real quick, I need to write myself a reminder because I know what I want to go over at the end of this meeting. All right, just had to write myself a note because I was thinking about this earlier and I don't want to forget it when I tell everyone on this. Okay, so QCOM, gapping up this morning. All right, stocks gap up. You might think the setup is missed. I don't think so every time. Now, in this case, for SPY, if you look at SPY gaps up, never fills its gap down. Okay, maybe the long setup was missed here for SPY, if you want to say that. Okay, that's fine. Look at names that gap up and then look at names that filled their gap to the downside. Okay. There was quite a bit of them today, Pinterest being one of them. Okay. This is a setup that I'm going to really start to employ every single day if the market is green after tomorrow. If the market breaks out tomorrow with CPI, this is something that I'm going to keep watching and employing until price confirms me otherwise. We got a gap up to up and down now, SPY and QQQ. To the top, up and down. Oh, so there's a gap up top for SPY to fill. That's good. Yeah, there's definitely a gap to fill to the downside now, thanks to today. But if there's a gap to the upside, that's even better because that's something for them to latch on to tomorrow. But QCOM gaps up this morning. You might think the setup is busted. Don't beat yourself up over it if you didn't swing calls. Wait to snipe your entry. Okay, here's what I noticed about QCOM, and this is my exact breakdown. If I remember that I did this morning of yesterday. Here's a supply zone intraday that QCOM gave us. Every time it pushed towards 179, it was rejected. Couldn't hold 179 here at around 12:45 to 1 o'clock in the afternoon. It reverses to the downside. Okay. Price strong close into the supply zone that we marked right here, reverses. Okay, whatever. That's fine. QCOM follows the market gapping up this morning, but then it fades that gap up. Okay, look what happens here. Buyers hold 179. 179 QCOM. This is like where experience and choosing like a little bit of luck comes into play. Stocks have different psych values based on how, like, psychological levels. Okay, it's common that every 0 and 5 for every stock out there is a psych level. Okay, SPY printing $300 for the first time was huge. I remember that. SPY printing 280 for the first time was huge. I remember that. SPY printing 400 for the first time. That's a big deal. I mean, that was a bigger deal back then. Yes, half number, whole number, what he just said in the Zoom chat. That's a big deal. That's stuff to pay attention to. Okay, but that's different for every single stock. Amazon, 3,000 is a huge deal. Okay, Amazon printing 3,127, probably not a big deal. Thinking off the top of my head there. Okay, AMD printing $90, then $100 and $150 for the first time. That's a huge deal. Okay, QCOM. QCOM, I mean, this stock is a spectacular company. They're really pushing higher the last year or so. 179, I said 179 because of this right here. They treated 179 as resistance, as resistance, as resistance. Okay, it's a whole dollar, right? It's a whole dollar. It's not something like 178.62. Okay, like it's a very odd, ugly number. Instead, it's 179 because of rejections right here. Couldn't hold above it right here. Couldn't hold above it right there. It's a whole dollar. Okay, a whole dollar, even though it's odd, it ends in a 9, not a 0, is better than some random decimal point. Okay, or some random value. That's what I saw in QCOM. So that's the stuff that you're going to start to catch on to. Okay, and that's different for every single stock out there. Okay, trade the same 5 names for a month. You will see what values they respect and treat, and where buyers and sellers are sitting at certain levels, more so than any other. I kind of butchered that. Let me try and rephrase that. If you watch the same 5 stocks for a month, you're going to see the key levels that they have, the key levels that buyers and sellers sit at, the key levels that matter, and the levels that you think might matter that actually don't, where there's no limit orders waiting to be bought into or sell out for profit. Okay. That all comes with experience, and that's just time under your belt. QCOM, I don't trade this name that much, but I saw rejections at 179. Okay. Price gapped up. If QCOM fills its gap to the downside, watch for a bounce out of this area of value. That's what I said. This is an area of value. But then later, I think it was in the main chat, I said, watch for a bounce off of 179, because 179 is the whole number. Okay. It's no ugly decimal point. Well, look what we get. We get a perfect to a T bounce off of 179. Overall, ugly candlestick. I mean, there's a little bit of buying pressure there. There's no body. There's a big upper wick. But guess what? That's my stop loss is 179. So this 5-minute candle closes at 179.18. Guess what? Price goes under 179. See ya. I'm out. That support has been lost. Okay. But this dollar value, because it's 179, it's not a psych level. 180 would have been the psych level, but it wasn't. Okay. 179 is in this area of value. It's the only whole number in that area, or in this area of value. That was my entry point, confirmation to go long. Ended up being an intraday double bottom off of 179. Buyers again confirming that level to us. And look what happens the rest of the day. Price closes at where does QCOM close? At 183.62. Okay. We caught over a $3 move. Okay. And that was because we were able to identify 179 was the key number in this area of value. Okay. You can say it's a supply zone, but I'm basing this area of value off of a few hours of trading the previous day. Okay. If you notice my supply zone for IWM, that was over a course or over a period of a few days. Okay. Yeah. Whatever. It's a supply zone. Sure. If you want to say that, but it's a very small supply zone that only impacted like 4 hours the previous day. Okay. Instead, in my eyes, this is just an area of value where buyers and sellers are interacting. Yesterday, sellers were sitting here. Today, it was buyers and they double bottomed price. Okay. This kind of gap up and fade and then bottoming at a previous area of value. Those are the long setups that I'm looking at from here on out. If the market stays strong after CPI tomorrow. Okay. If CPI is good tomorrow, I think this green lights the market to be bullish for another month, because that would then be the February CPI report coming out in March. Guess what? March 15th, 16th is also the next FOMC meeting. So we're green after tomorrow. That green lights a whole month of being green, in my opinion, because there's no other big catalyst coming from the Feds or coming from the economy that can alter market momentum, in my opinion. Now, maybe Vladimir Putin has something to say for that. We will see in due time. Okay. But that was my thought process for QCOM. Okay. Does anybody have any questions for that as well today? And, QCOM finished like up 50% plus. So, I swung strong volume into close, but if we're red tomorrow and QCOM goes red, that's just pure greed. Okay. I'm going to say it right now. I swung my full position. I want that bag tomorrow. That's what I want. I want that bag. CPI is good for the market. Guess what? QCOM, NVIDIA, AMD, they're all ripping. QCOM might go red tomorrow based off of CPI. We don't know. Okay. But if you swung a 50% bag and you never trimmed, you never took half off for profit or whatever, that's just greed. I'm sorry. Like, I'm going to call myself greedy. Like, I am greedy right now, but I'm accepting the fact it goes red. Okay. Gotta watch out for the broad information phenomenon. They run stops all the time with that ink. Okay. Yeah. I mean, yeah. Always. How do I word this? Always expect the unexpected, right? Like, no surprises. Always expect the unexpected. Anything can always happen. We play, I mean, we're options traders, right? We have zero impact on the market. Okay. Options contracts do not move price. I think somebody last week argued with me on StockTwits that was a thing. That isn't a thing. You could buy 1,000 option contracts. All you're going to do is light up somebody's scanner on Wall Street. That's all you're going to do. You do not move the stock price up. What moves the stock price up is buying, and we're buying shares. What moves stock price in general is just buying and selling of shares. Option contracts have zero. Okay, we literally, as options traders, have no effect on the market. Okay, literally none. We're just going with the flow. But once we enter a trade, we're now a part of the market. Quant traders trade based on options flows. Okay, they will try to manipulate the price to make the options. Oh, fuck yeah, they will. I'm not. Yeah, that's a big thing. Yeah, letting options expire worthless. Hell yeah. That's something that a market maker would love to do, to screw over retail. And you know the names that they're going to watch the most, going off of what he said, to make options expire worthless, it's all these shit stocks. Okay, it's harder to do with the quality large cap names, like all of Fangman, basically. It's harder to do it. Not impossible, but it's harder to do it. Now you got something like Piton, Hood, AMC, GME. Yeah, they'll let those options expire worthless. Don't ever think they wouldn't. It's much easier with the shit stocks than it is the quality stocks. All right, moving on to the next setup in Pinterest. I've seen units by. Oh yes, OPEX. Yeah, I mean they can pin anything. I'm not saying that. Like, they can always pin anything, but it's going to be harder sometimes for the quality stocks. The shit stocks, the retail favorites, like all the small EVs, like XPEB, NEO, LI. I'm trying to think of other popular small names. I can't think of any. It's the retail favorites. That's what they like to do. Fubo, PLTR, those are two ones. The bigger it is, the more quote unquote quality the company has. It's harder to do, but never impossible. Okay. Pinterest. Let me go to the 15-minute for this one. All right. I'm going to unlock this chart. Okay. So I think I posted this chart and then I entered my trade and my stop loss was broken, or at least when I first posted this potential setup, the stop loss that I said was a hard stop was actually broken. So, again, typing slow and then whatever, it just happens to how it works. So then I adjusted my stop loss to a break of low of day. Okay. Couple things about Pinterest, similar to QCOM in the only sense that it faded its gap up. That was something that caught my eye. It faded its gap up. Okay, that's what got me watching Pinterest first. Okay. Now, I'm going to zoom out a little bit here. Look at yesterday's volume bars, and then look at the previous day's volume bars. Okay, pretty low volume until you get to close. Okay, now after earnings, we see a lot of volume. Okay, that's normal. That's to be expected. After earnings, it looks like whatever the hell it is. Okay, that's great. Look at this morning, though. Look at the last 2 days right here, and then look at this morning's volume popping off. Okay, these volume bars that I'm watching come in, and I entered this trade a little bit later. I know I entered it after QCOM. I just don't remember the exact time. Seeing these kind of volume bars come in, and you look at the previous 2 days right here, something's up. I mean, this is a surge of volume. This is above average volume based on the previous 2 days for Pinterest. I haven't traded Pinterest in a hot minute. It's been quite a while, so I don't know what the average volume looks like for Pinterest. But looking on the 15-minute time frame, looking at the last 2 days, there's a lot more volume today, this morning, versus the last 2 days. Okay. Let's look at what kind of TA setup we got going on. Here's an area of value right here. Well, it was a demand zone until that $26 was broken right here. I think I said demand zone earlier when I broke or when I posted it. It's now just, I'm going to call it an area of value. You can still call it a demand zone if you want, whatever. There was clear buying pressure right here at $26. Okay, that's great. Look what stock price is doing right here, coming back down to $26. They do hold $26 for a little bit right here, and then it fades, drops 10 cents or whatever. That fade right there, guess what? They know retail is using $26 as its stop loss right there. They break that stop loss by 11 to 12 cents, whatever it was. Look what happens. They rally price back up. This right here was stop loss hunting by Wall Street. 100% stop loss hunting. They know that retail saw this $26 bounce yesterday, and they pushed price just 10 to 11 cents lower than $26 before reversing price to the upside. That was stop loss hunting. Okay. I adjusted my stop loss, but in my original breakdown, I said $26 is hard stop because of this. Okay. I'm sorry if you sold for an L, but I don't think I was in this trade. I don't remember, but I know I adjusted my stop loss to break a low of day. That was what my new stop loss was when I entered this trade. But the first thing that caught my eye, besides fading the gap down and approaching demand zone, was this volume. That volume coming in is bigger than the previous 2 days. That's what catches my eye. Keep in mind, the entire time this is happening, the market is green, but consolidating. Okay, so now start thinking. If the market stays green and moves higher, what are the leader stocks doing? Okay, what are the leaders doing? Well, where's Facebook on my chart? Facebook surprisingly had a good day after atrocious earnings. It's up $12. Facebook is the top social media stock. Pinterest is a follower. Okay, let's look at Snapchat. Snapchat up 8% today. Followers are following. Twitter up 5% today. Followers. Oracle up 3.25% today. Stocks were green today. The followers were green. Pinterest only green by a little bit, but we still caught a pretty good move at 33% profits. Okay, if the followers in the market is leading, Pinterest is going to be most likely a follower stock. If the market sentiment matched and never faded, Pinterest can continue to move higher. It came into a demand zone. It came into an area of value. Buyers showed up. There's larger, well, I can't say the normal, but this volume that came in is a lot bigger and a lot larger than the previous 2 days. That's all stuff that caught my eye that's sticking out to me. Now, I chose next week 27 strike calls. We entered right around like $26.05, whatever the hell it was. Okay. Pinterest, we entered at $26.13, I think, something like that. Okay. We have 9 days, now 8 days until expiration, and we chose 27 strike calls in 8 trading days, or at the time it was 9. We're giving ourselves 9 days until expiration for stock price to move up $1 for us to just be in the money, not even green, just in the money for these calls. That is completely reasonable to expect. Okay. Now, see profit, take profit kind of market, right? We gapped up, still the market was choppy. There's still a gap to the downside. We know how volatile the market has been, all that good stuff. See profit, take profit. I swung my full QCOM position, hence why I sold Pinterest. I locked in some profits today. Okay. But if you're still holding Pinterest, this setup is completely valid still. Bullish close, volume came in. $27 is only 20 cents away based on after hours trading. Okay. Setup is completely still intact. But that was my thought process. Okay. So that's all I wanted to say as far as TA and price action and patterns went. Okay. I tried to talk about patterns the best that I could with Apple, but when I do these meetings, what I love to do is go over recent history because it's fresh in my mind and I can talk about my notes and my thought process a lot easier than I can talking about something that either I didn't trade or it's been a few weeks since I've traded it. Okay. Like DIA, for example. The only thing that I remember is we traded the supply zone, and then we traded the retest of that demand zone. Old resistance, which was supply, is now new support in the demand. That's all I remember from that trade. Okay, and that we sold for profit, of course. All right, but that is all that I had to go over for tonight. So if anybody has any questions about anything that I asked, please do write or ask away now. I'm open to any and all questions. Definitely don't hesitate. Don't be shy. But one thing that I do want to say, and I was thinking about this earlier, I'm going to go over it now. And of course, I'll tell the team to either tonight or tomorrow before or after CPI, but I'm going to get to it before market open. Okay. Tomorrow's big day for market, CPI. But as I said a few minutes ago, it's going to, in my opinion, if CPI is good and like it misses, like it's lower than expectations or even matches, okay? If it matches expectations, I think that's bullish because that's what the market has been pricing in. It's not worse. Market knows what that, or if it matches expectations, that's what the market was expecting. That's not a surprise. Market hates surprises. In my opinion, it's going to be bullish reaction. But of course, we wait and see what the market does because price doesn't lie. Okay, if the market has a positive reaction to CPI and we're green tomorrow, stocks that had solid earnings and guided up are the stocks that I want to go long on and pick up March monthlies. The March monthly expiration, if I remember correctly, is 3/18. Okay, that week is FOMC because FOMC is March 15th and 16th. So it should be Tuesday and a Wednesday, if I'm remembering correctly. And then Thursday, the 17th, and then Friday is the monthly expiration. That sounds right, talking about it in my head and thinking out loud. Okay, stocks that guided up is the key, not good earnings. Guided up are the ones that I want to go long on. Okay, that is semiconductors, it's Pinterest, it's Microsoft, and Snapchat. Snapchat did guide up. Those are the stocks that I want to go long on. And I want to find, now obviously I'm not just going to press the buy button and go long on calls. Like I need to see conviction and patterns in TA, and I'm going to wait for a pullback and all that good stuff. But those are the stocks that I want to go long in because those are the names that are going to have strength. If the market rallies tomorrow, Facebook and Netflix are going to rally too. Those two stocks had piss poor earnings and a whole bunch more. Okay. When the market reverses, those are the stocks I'm going to catch to the downside because they are most vulnerable. They guided down. They did not have good earnings, especially Facebook. As we all know, I'm never going to shut up about it until it's at 150 bucks. Okay. If the market is, okay, say there's a negative reaction to CPI tomorrow, guess what? I'm coming for Netflix or Facebook right away because that's the sucker that's going to take the beating the worst because there's no reason to be bullish for Facebook. And so the selling should be very noticeable. Google, if you've got a big account, Google, Facebook ad money is going to Google. I'm telling everybody right now, Google, too big of a stock split, trade the options while you can before the stock splits. If you've got a big account, okay? If you got a medium, small account, don't even bother with Google. Okay, but for any large account out there, Google and Amazon to a degree. I mean, Amazon earnings were shit, but the reaction was positive. So, that's what we get for Amazon throwing Rivian into its earnings. But their ad business did do good too. Okay, so they're going to sink the Qs. Yes. Yep. All right, but that is my thought process for swings. If the market is bullish, okay, we have to wait and see, and we have to get follow through. Okay, we can't just rip off of CPI into the open and then fade the whole rest of the day. Okay, that's not going to cut it. I need to see follow through and continuation and all that good stuff. But that is my game plan if we are bullish. And guess what is now on my list as well? Disney. Spectacular earnings from Disney. Basically the exact opposite of Netflix. They saw growth. Netflix didn't. Okay. If Netflix is saying competition, Disney has competition too, but Disney saw growth. Hence the huge after hours reaction. Okay. So add Disney to potential long setups. as well. And March monthlies is the way to go because we can buy time and let the market do its thing. Okay. Can you at me on this Discord link or DM it to me if you can? And with that being said, I'm going to go ahead and stop recording.